Okay, so welcome back, guys, to another course of market structure, right? So we'll go through the definition of market structure. So what is the market structure, right? So the market structure is the footprint of price action. If this footprint is understood properly, it reveals to us the story on the chart, and we can understand the behavior of all market participants, right? So our job and objective as retail traders or dumb money is to learn to follow the footprint of smart money, nothing else, right? So the course outcome, what you'll be able to do after this course, right? You'll be able to determine the bias or direction of any trending market. You'll understand higher time frame, order flow, and external structure of the market. Okay, you'll be able to master supply and demand zones for entry and exit points of your trades. All right, guys. So we are going to start with the boring stuff, which is going through the theoretical market structure. And this is to lay a proper foundation before we can advance to more practical stuff. I left the link below in my description for practical market structure course. So let's dive in, guys, and enjoy. Okay, so we have the external and internal structure, right? So the internal structure, it occurs inside the external structure, right? So from now, if you understand top-down analysis or multi-time frame analysis is similar to external and internal structure, right? So for now, we're going to start with the external structure, right? So this is the theoretical concept. So basically, we'll have something like this: break of market structure. This is a bullish example. Okay, so we can change the color and make it 2 pixel and make it black as it states, right? So we have break of market structure here, break of market structure, and we have another break of market structure. Let me just, yeah, break of market structure. And to make it more complex, and very interesting, because reading the structure practically is never easy. Okay, so let's say this is a change of market character. So let's say this is chalk change of market character. So inside here, we have break of structure and we have break of structure, and these are basically occurring inside this external structure. So these break of structures are internal break of structure, right? They mainly happening most of the time on the lower time frame. Okay, so we have another break of structure here, another break of structure to the upside, and another break of structure to the upside again. Okay, so what we have here is higher low. If we have to label our swing points, this is a higher low, and this could be your higher high. And here is a higher low. Okay, this higher low was responsible to break in this previous higher high. Okay, and we have a new higher high there, and this one is, it might be confusing. We have a lower low here, right? So yeah, it might be confusing to most of you guys, but we have a lower low there, and we had definitely a lower high somewhere here on the lower time frames. All right, um, and then inside here we have a higher high, higher low. So about that, higher high, higher high, higher low. Okay, so immediately the market breaks this previous higher high, right? It comes back to the what? To the demand zone. This is a demand zone. Okay, so we have a higher high there and a higher low here. We have a higher low here, right? The market goes and break the structure there, and what we have now is a demand zone. Okay, and we have a new higher high there. Okay, and this is external structure. Okay, so the internal structure will be more complex, but we'll try to do it to simplify it and make it more simple. Okay, so basically the external structure will be something like this. Let's change it to 1 pixel and then make the color red to look more like this. This is happening on a lower time frame within the external structure. So this will be more simple when we get to the particle side of the market structure, guys. Okay, this will make more sense and it will be more practical and more easy. Okay, so from this point we have break of structure and we have a lot of higher highs and higher lows within this, so we're not going to label our swing points of internal structure. So this is going to be a break of market structure and the break of market structure, break of market structure, and what we have there is change of character. Okay, change of character within external structure. Okay, so understanding this gives you an edge over the market. Okay, break of structure, and we have another chalk, break of structure. So about that, break of structure, break of structure. We have another chalk, break of structure. So when you understand both the external and internal structure, you can actually trade in both direction in any bias of the market, right? Whenever you spot a trading opportunity, you can take your trade with both hands, knowing exactly what is happening both internally and external structure. Okay, so this was a chalk, this was a change of character somewhere here, change of character to the upside, and break of structure. Okay, so we can go on and go on and go on, guys. We can go on and go on. Let me try to label this one. This was a break of structure here, another break of structure. Okay, and this was a chalk here, change of character. So for now, we are done with the theoretical part of the external and internal structure, right? This is a bullish example of the theory concept of a bullish market structure. So uh, after this, we'll get into more practical side of the market structure, guys. Uh, See you on the next one.